Hey, good morning. It is Saturday morning. It's May 31st, and it's the day after the last trading day of May. May ended up being a really good month for the stock market, where stocks really rose nicely. On the S&P, stocks rose 6.15%. So it was a terrific month to be a stock investor. And it goes to show that, timing the market is just not good. Some people try to time the market and sell and then get back in. Well, it's really difficult. If you sold at any point in this valley here, you would have been missing out of a great month of appreciation. So just one more reason to stay invested in stocks. Pick great companies, hold them, and just let your money compound. Let your money work at night and do well with your investments. So the month was excellent. I already updated my performance on my portfolio. Very happy with the performance for the month of May as well as for year to date in 2025. It's been a really good year. It's also been a really good year for my channel. Thanks so much for all the people that have joined the channel. Really appreciate it. I appreciate everybody who's joined and has been a member for some time. And as well as the people who have joined more recently. Thank you. I really appreciate it. I especially appreciate all the feedback on, what is interesting and maybe what's not interesting, how to improve the channel. All those things I listen to, and I appreciate that feedback. So thank you very much. I encourage you to be a full member by joining. Just go to my home screen on YouTube, hit the little join button. You'll get the details on the different levels that you can join at and the perks that you get at each level. I think it's really worth it. Looks like we have Zubio. Do you think it's still a good time to buy? Absolutely. So you ask a question of, you know, let's take a look at the max line here. Is there a perfect time to buy stocks? Like you pick that perfect day. Well, a couple of things that are challenging with that question is first, I worked for my money. I accumulated income over time. I created capital over time, and then I invested that capital. So I didn't have the luxury of, I wasn't born with like $100 million, and it's okay, go invest this right, and I could pick a one day to invest it. So what I would encourage you to think about is, pick a path, pick a strategy, pick a philosophy of how you're going to be an investor, and then start working to try to get better and better and better at that particular strategy. Aim for perfection, but we'll never be perfect, right? I did an super investor video, and I released it right before I started the live stream on Pat Dorsey, and he's probably my favorite super investor. The guy is really good, and he's having a bad year. But the guy is awesome. Like for 20 years, he's been really good. He's made a ton of money. Okay. So if you, instead of, is this the perfect moment to invest? It's a perfect moment to continue to invest, to continue to learn, to continue to get better, to study, what worked for you, what mistakes you've made, or maybe better put is maybe some of your losses can teach you a few lessons. And that's where the true wealth creation lies, is in having that long-term passion for building wealth, having your money work at night while you're sleeping and resting. Your money works 24/7. You invest in a stock and it goes up over time. Great. It's expanding your wealth. You invest in real estate, it works 24/7. You invest in it 20 years later, you got a really nice pile of equity there, adding to your wealth. So that's how I would answer the question, which is it's nearly impossible to pick an exact moment to invest, but it's a great time to buy because you'll always find companies that are not accurately priced based on their intrinsic value. And that's what this channel is about, is looking harder at investments, kind of taking a more advanced journey into the valuation of a stock based on free cash flows and earnings per share, and being able to see, hey, would I be buying that at a discount, or would I be buying it at a premium or fair value? So that's part of what I do, and that's what we do here. Looks like David Jackson, thanks so much for your support. How many stocks do you would have in your portfolio? So let's take a look at my portfolio. And so this is an accumulation over many, many years, right? So probably have about 45 stocks. I have some bond ETFs in there, so call it 40 to 45. My biggest stocks, probably like 60% of this portfolio's value is in 6-7 stocks, to answer your question. For a new investor, ETFs is a good idea, with maybe 6 stocks or so, 6 stocks that you really can understand. Over time, you can grow that to 10 stocks, 20 stocks. Some of the members of the channel, they have 100 stocks, they have 50 stocks. And it's really about having what, Warren Buffett, I believe, calls it a sphere of knowledge or competence, and invest in companies that you can understand, and you can diversify, which is a good idea, but only diversify in things that you understand and are net positives. So, David, that's answering your question, how many stocks do I own? It's taken a long time to get to that number. And depending on the level of investor that's asking the question, or is interested in what would be the ideal number of stocks, is if you're newer to investing, keep the number of stocks to a number that you can analyze at least twice a quarter, preferably once a month. And you review it, make sure that it's performing really well. It hasn't changed course from the company that you thought you were buying, and really get to know that company, because you're a part owner. As time goes on, like I've owned Meta for a long time, so I know Meta really well. I've owned Chevron for a long time. I know that company really well. So I don't have to kind of relearn things when it comes to those two companies. I'm pretty much in tune with what they're doing. I check in on them every month, but it's very quick. Whereas I have new stocks like Astera Labs is a new stock that I bought maybe 2 months ago, and that's a new company to my portfolio. So I spend more time on that company. So just I guess it's a time management decision. How many stocks do you want to manage? Do you enjoy it? I love this stuff. Man, I can analyze stocks all day. I can look at companies and try to understand, how are they going to operate in their industry? How are they going to dominate their industry? And that's really fun to me. So it's really, you get to make your portfolio the way you want it, based on the number of stocks you'd like to manage. So thanks for the question, David. And please continue to ask questions. And I don't know, David, if you're on the Discord, but if you haven't joined, please reach out to me. My email address is victorhinvesting@gmail.com. And the Discord, although Discord has a bunch of scammers, I think everybody knows that. The collaboration on Discord for this channel is really, really good. I think you can learn a lot from a lot of investors that are tuning in. They're actively managing their portfolios, going about it in different ways. So you get different examples. And that's really, really beneficial to all investors that are going into that Discord. And of course, you can come to the live screens and ask as many questions as you'd like. If you have stocks that you want me to take a look at, please put them in the chat. I'll take a look at them. That's one of the perks of being a member, and I'll be glad to do it. So thanks again for your support. All right, so thanks everybody for tuning in. It's a Saturday morning. I usually don't stream on Saturdays, but I'm had some free time and I wanted to stream and I guess maybe say hello to some people that like to look at their stocks or go over stock investing on Saturday mornings. So Zubio, I have a small portfolio that I'm tempted to use for down payment first home purchase. So I think buying a home is a really good idea, and you know, that's you're trading one investment class for another, so that's always a good idea. Um, if you were like saying, "Hey, I'm thinking of selling my portfolio and buying a new Porsche," I'd probably be like, "Well, maybe you can grow your wealth, and then when you have so much wealth you can afford a Porsche, you can go buy one." But to trade, you know, equities for real estate, that's a pretty good idea, depending on, you know, what you're buying and where you live and so forth. I reside in Southern California. Real estate prices are really high. I'm a real estate investor, by the way. I've made good money investing in real estate. Made great money investing in stocks and crypto. But real estate's really expensive. I don't expect it's going to appreciate as fast as it did, you know, for the last, call it 10, 15 years. It's just really expensive in Southern California. But other parts of the country may be really good buys, you know. So good luck with that. I think, you know, I'm glad to hear, you know, these are quality situations, which is, hey, I have money saved up or like that capital inside of a stock portfolio, and I'm thinking of moving that capital into a real estate investment. Great. That's awesome. You know, that's the kind of thinking that is really productive. So do you still have any stocks you bought 20 years ago? Yeah, a couple. Yep, a couple. And I kind of wish I had some of the stocks that I bought 20 years ago, 30 years ago. And, you know, like I had Microsoft for a long time, like 12 years. And I did okay with it, did well with it. But more recently, that stock's just really flourished. So hindsight's 2020. But overall, things have worked out far better than I imagined. If I go back to my 25-year-old self, I'm 56, and I was looking forward. I'm like, okay, here's a list of things that I would want. You know, I've far exceeded that list, and have high hopes and high targets going forward. And you know, one thing that I would put out there on a timeline, right, is things tend to kind of not necessarily repeat themselves, but kind of rhyme. And I'm seeing that the AI situation, paradigm, opportunity reminds me of the internet situation, because I was a young person during the internet boom, right? I didn't have a lot of capital back then, but I knew that the internet was going to make it. And I did start investing in companies that were internet related. So I had that experience. Now I have lots of capital and I'm looking at AI. And I think the piece that I would put out there as a cautionary note is during the internet era, Amazon as an example, that stock lost a lot of value in the first 5-10 years of the internet, because the internet was so new. There was a bunch of junk businesses. There was a bunch of bad businesses kind of mixed in to the internet craze. And those bad businesses, once investors realized, whoa, this business is terrible, they kind of got at internet stocks. Like, oh my God, internet stocks are too risky. And they threw away things like Amazon and a bunch of other really high quality stocks. AI is similar. I'm seeing a bunch of like AI companies that it's like it seems a little too thin of a proposition, and I think eventually investors are going to get burned. You look at stocks like CoreWeave, seems a little too thin of a proposition. So I would say that's out there. So David, you got some more comments. So you bought BHP at Aussie company. Oh, cool. You're in Australia. How did I find out about the company? All right, so let's get into BHP. I'll give you a sense of how I found BHP and why I found BHP, right? So what I try to do is here's kind of like the heat map, but this heat map just kind of gives us kind of like the scoreboard. What for this day, this is what sold off a lot, and maybe Eli Lilly, there was a lot of inflows into it. You can go for the past month. But in order to get a sense of which industries are doing really well, and I'm working on BHP, so bear with me, David. I'm just going to kind of build how I ended up getting into BHP. So I try to research and say, okay, well, what industries and sectors, industries are like materials, right? And within materials, you have copper miners, which is what BHP is. An industry belongs to a sector. It's almost like saying in the United States, right? You have counties, and counties belong to a state, and the state belongs to the United States. Industries are like counties, and a bunch of counties make up a sector. A bunch of industries make up a sector, and overall they make up the stock market. All right, so let's get into how I found BHP. So we're going by industry. So as I study industries, materials shows up as one of the top performing sectors. And I'm like, man, why are they performing so well? Well, copper prices are doing well. Gold prices are doing really well. So certain materials are carrying really good sale prices. So when the miners extract that mineral or that resource and sell it, they make a lot of money. Okay, well, I want a piece of that action because I can understand mining companies. I understand that they supply, in the case of copper, right? Copper is in, geez, everything. I'm looking at a computer here. There's copper inside this computer. There's copper inside my phone. There's copper in my house for the wiring around all the electrical. There's copper in my car. There's copper in everything, right? So I understand that. Now, when I go into materials, number 2 is BHP here, $124.9 billion market cap. So there it's giving me a list of companies that belong to an industry within a sector. It's the second and at times the number 1 performing sector of all sectors, including technology, consumer discretionary. So it's number 1 in 2025. So that's the first green flag that tells me look here for good performance. Now, once we drill into BHP, and I was familiar with BHP before, a couple of things drew me into the company. First, you see how there's a drawdown over the past year of 17.59. So the stock isn't overpriced. It's actually priced quite nicely, if you ask me. It hasn't done terrifically over the last 5 years. It's had really good sell-offs along with really nice rises. And you see how this sold off, then rose, sold off, rose, sold off, and I believe it's going to rise. Now, it's a pretty good cap. They're located in Australia, and a lot of what they extract, a lot of the resources they extract, go straight into Asia, China, Japan, Vietnam is really coming on strong, by the way. Vietnam's economy is really strong. India. So BHP is producing resource materials that go into that economy that's doing really well. So that made sense to me. All right, so we got a company that has a low PE of 11, pays a pretty nice dividend of 5%. Analysts think it's discounted by 8%. So I think there's going to be some upside on this stock. Their revenues have been kind of flat, but they report semi-annual. That's one thing about Australian companies is they only report twice a year, as well as like UK companies will only report twice a year versus 4 times a year as American companies would do. The revenue has been a little bit up and down, but I think that the material prices of what they produce, copper, steel, and so forth, are going to improve. And when that happens, I think the stock's going to perform. Now, that gives me kind of a sense that this may be a good opportunity. And I go even further. Now that I know that, okay, the stock's setting up well, it's kind of sold off, so it's probably going to give me a good price. I go and do an intrinsic value analysis on BHP, which I already did. And what do I look at? I look at free cash flows and I look at earnings per share. And I try to determine what's the net present value of the free cash flows for BHP. And let me try to make this a little bigger for you guys so you can see the numbers a little easier. There we go. That's better. So here's BHP, and we're looking at, first we're going to look at what kind of cash flow do I expect this company is going to produce over the next couple of years and into the future. So they produce very good free cash flow historically, and their business tends to have volatility and cyclical trends. So what I did is I took a 7.5-year average, and I used that average to have kind of like my baseline for my forecast. And then I was able to start with this forecast and forecast out the free cash flows for the business. Starting with the 7.5-year average, and then I'm going to grow those cash flows by 10% because I think that material prices will improve and overall this marketplace will improve over time. My forecast for the first 4 years is here. It's growing at 10%. And then all terminal value, which is all years after year 4, will grow at 3%. Okay. And I'm going to discount all those cash flows to get to a net present value by 11%. And that achieves the intrinsic value is the net present value of all these cash flows. Now, one thing I'll point out is I'm here in the US, BHP is down in Australia. So I'm using a higher discount rate than I would for a company that's here in the United States at low risk. 11% versus 8%. That's a much higher discount rate because I want a higher rate of return since I'm taking a higher risk. Okay? I'm going to add cash on the balance sheet and take away debt that they have and get to an equity value. The equity value of BHP is 182 billion. The market cap for the company is a little less than 124 billion. So this stock is discounted by 32%. This is a dividend paying company that has a discount when I compare the intrinsic value of the company that's based on a forecast that I put together using their average free cash flow. And that's a pretty good proposition to me. Now, earnings per share isn't quite up to a level that's going to support the stock price, but this is more important to me. Free cash flow, intrinsic value is the most important determination of value for a business. I think this is going to improve over time as material prices increase. It's going to get better. So overall, BHP is a stock that I hold. It's a buy for me, and that's how I ended up finding it. And there's investing outside my home country, US, is a good idea. Most of my stocks are US-based stocks. and that's good because I know these companies and get information on these companies. But diversifying to other regions of the world is a good idea because maybe Asia starts growing faster than North America. If that's the case, I'm going to benefit from being an investor in Asia based companies. So I own a few companies in Asia, BHP, Alibaba, Futu. I own an ETF that invests in companies in China. And I have an ETF, a very small position in companies in India. And I'm beginning to look at Vietnam. I keep hearing Vietnam's doing really well. So I want to take a look at Vietnam. So that's kind of like the complete journey, David, on how did I find BHP? It's down in Australia. I did some homework on the company. I think they're a really well-run company. The continent of Australia, I believe it's a continent, it's not an island, has a lot of resources. And these guys get to tap into those resources and sell them to other countries. So good question there. Hopefully that answered your question. And keep the questions coming. So thank you for that. All right, so that was BHP. And FYI, a couple of things, David, that you may already know. This sheet of valuations that I do, I update once a month, and they're in the investor directory or folder that you get access to. I gave you access at some point, and you can access that folder, and you'll get a copy, and I update it once a month, of all my valuations. You also get a copy of this model itself, okay, a working model. So you can do valuations as well. You get other tools within it that I put in there. I put a retirement model in there if you're interested in figuring out your retirement. That's the same model that I use. My numbers are not in the example model, but it's the whole structure is identical to what I use. So take a look at that, and obviously you can ask questions on live streams, attend investor calls. It sounds like you're down in Australia, so it might be a little tough for you to join member calls, but I'm glad that you're on this call. Now I'm glad that I started streaming on Saturday mornings so I can cover your time zone. And thanks again for your support. All right, so let's take a look at a couple of hotspots of the market. So I'm going to kind of look at what happened most recently and then kind of look at a bigger time horizon. So yesterday, what's interesting is NVIDIA sold off a day after it really had a lot of inflows. So NVIDIA went up like 3.5%, maybe 4% on Thursday, and then it turned around the following day and sold off by almost 3%. So that's interesting. The healthcare space did okay. United Healthcare added to its value, which is good to see. Those guys deserve a break. They've had a tough time. And utilities did well. Staples did well. Let's zoom out a little bit. Let's go to the 1 week. And looks like NVIDIA did well for the week, really well. Apple started to go up, very good. Meta did really well. Broadcom did really well, did terrific. Eli Lilly did really well. United Healthcare had a good week. So a lot of green. See, the week was really good. Let's zoom out further. We'll go 1 month. There's a lot of green on the screen and some really healthy gains. Look at NVIDIA, 24%. Broadcom, 26.6. Microsoft, 16.8. Apple had a bad month. I think Apple in general, their strategy lacks innovation. They're not growing. It's one of the mega caps that I think is risky. What are they going to do to grow? I don't think they have anything there. These things don't happen overnight. Like example, Google Alphabet, I think they're terrific, and they have Robotaxi. The Waymo business is what Google Alphabet owns. But it's taken them like 15 years to get that idea from idea to, okay, we have people being driven around by these machines they call robotaxis. So Apple, it's not going to happen overnight. And I don't think they have a pipeline of ideas. The last idea is they came out with their VR goggles. It was a product for nobody. Who wants to spend $3,500, $4,000 on a VR headset? That VR didn't work for Meta, and those VR headsets were like $300. Why would Apple release a product like that? It's kind of nuts. So that's an example of how I'm staying away from Apple. Berkshire. This is interesting because Berkshire went down almost 6%, and they had their big investor meeting at the very beginning of May. So the month of May, I think investors heard that Warren Buffett is, stepping away and handing the reins over to the new CEO, and away goes Berkshire Hathaway. This is kind of like the beginning of Warren Buffett not really being as active as he's been in the past. And of course, Charlie Munger is gone. So I think that's interesting. Is Berkshire going to have a tough time going forward? I don't know. We're 1 month in it, so we'll see. Meta had a terrific month. Very glad to see that Meta is up. Tesla had a really good month. So you're seeing some real positive gains. I mean, that's why you don't want to time the market. You want to be a long-term investor that just constantly analyzes companies, tries to get on companies that are flourishing. Adobe is a stock that I've been covering. It went up close to 12% over the last 30 days. That is terrific to see. Good job, Adobe. Uber up 6%. Cisco up almost 10%. Palantir up 13.5%. So just a lot of good stuff. A lot of good industrials are doing great. GE is up 22.6%. So a lot of things, a lot of good stocks out there, and hopefully your portfolios have these really green stocks, and you're doing great this year. So you can see there's a lot of opportunity out there. When we look at the big giant caps, I think I have the list. Here it is. Microsoft is the most valuable company on the stock market. $3.4 trillion market cap. It's doing well. Year to date, it's up 9%. NVIDIA is close to even for the year. It's at 3.3 trillion in value. And I'll have more comments on NVIDIA later, but I think NVIDIA most definitely is a huge success story, but can it sustain its stock price? You see how it's close to Microsoft's market cap, right? They're just within, 3% of each other. Look at the revenue. Microsoft's almost double the revenue. Microsoft's growing by 20%. So is NVIDIA going to continue to grow at their rates? If they do, great. That means they're going to catch Microsoft maybe in 3-4 years, maybe 5. But if they stop growing, look at their peers. They all have a lot more revenue than NVIDIA. So they're going to drop like a stone down to 1.5 trillion or so, which would be a very painful path for NVIDIA stockholders. But we'll see. The market is really enthusiastic about NVIDIA. We'll see if they can hold up. Apple losing lots of investors. A lot of outflows coming out of Apple stock. I commented that they have very little innovation. They're probably the biggest loser of these mega caps. The stock's down almost 20% year to date. So I think the situation for Apple just continues to get more concerning. And then the tariffs haven't helped them either. Amazon's losing for the year, but they're kind of on the comeback trail. Google, a loser for the year, but ditto, comeback trail. Meta, winner for the year. And Meta's actually, of the big caps, I guess you could say Berkshire's number one and then Meta's number two. Broadcom's having a good year. Tesla so far is losing quite a bit, but it's getting better. Tesla is getting better. They're accumulating. And Tesla has a big release, which is Tesla is going to release their robotaxi service in Austin, Texas on June 12th. We'll see what they release, because it seems like Tesla, every time they say, hey, we're going to release a product on this date, the date comes and they're like, oh, we don't have it ready. And it's like years later, the product's finally released. And it's amazing to see that consumers and fans and investors give them a pass every single time. It's like, I don't get it. Other companies would get, really, really punished for being that late on products. We'll see what happens this go around if they truly release an operable robotaxi service in Austin. It'll be interesting to see. Berkshire, I had those comments that for the past month, their stock isn't doing great, but so far for the full year to date, they're doing okay for 2025. All right, so let me take a look at the comments. No new comments. Thanks so much for joining. It looks like we have 23 people on the stream, and I appreciate it. What we do in this channel is we try to find companies that are discounted, and discounts based on intrinsic value that we can calculate based on the cash flows we expect the company is going to produce, as well as discounting the earnings per share a company is going to produce. Trying to get to a value of a stock and then compare it to its current stock price. Finding stocks that we can hold for a long time and see them appreciate and build wealth for our portfolios. And that's what the mission statement is for the channel. We've got a great community of investors where we collaborate. We collaborate on Discord, we collaborate on live streams. I do videos. I do a lot of member-only videos as well. I release my buys and sells each week, which members like David have access to. If you're interested in that, visit the home screen of my channel, and you can get signed up. You can look at the different levels that you can get signed up for. All right, David, do you agree mining companies are price takers, not price makers, therefore less desirable? Yes. Yes, I agree with that. You bring up a very good point. So when we look at, this is the desirability quadrant that I cover on videos, if you guys watch my videos. And let's put BHP to the test, right? So BHP is a price taker. Now, the one thing that they do have that is that they have the rights to mine certain parts of the world, right? Other companies can't come in and start mining where BHP has the legal right to mine. So first, an example of a company that has pricing power, has great monopoly-like advantages in their industry. Let me move this guy over a little bit. There we go. So first, an example, Microsoft. Microsoft has really strong competitive barriers. They sell their product to customers that pretty much need their product, and they can make great profits on their product. They get to grow their business at high rates and really dictate the pricing on their products, because in many cases, like Windows is an example, it's PCs. Every PC has to have Windows. Well, they get to state it's going to be $50 a computer, $75 a computer, and so forth. Then you have, on the opposite end, is like Hewlett Packard, older industry. Their revenues are going down. Printing, which is one of their big product categories, is, people print less these days. We don't print as many documents. We want to go digital as often as we can. So having said that, now let's go through BHP, and I'm going to scorecard BHP. So competition, do they have competition? They do. Now, I think they're very good because they have copper mines. Even though they have competition, they have copper mines. They're geographically located in Asia, so they can distribute into Asia, which is a big manufacturing area. So that's good. Network power. Now, Microsoft has awesome network power, right? Because they have such a big business. They can release new products. They can influence customers into buying a variety of products that come from Microsoft. BHP doesn't have any network power. They produce copper, and copper is copper. It's a commodity. So they have very little network power. Balance sheet is decent for BHP, so we'll give them a B there. Revenue growth, isn't doing too well. They got to start growing. Profitability is okay, and free cash flow historically has been okay. So you see, we got B's and C's, and using kind of like what we do here in the United States is, if you're an A student, right, that's the best. A B student is above average. A C student is average, barely passing. And BHP would be what I consider to be a gray company. And a great company means they're investable, but I need a discount. I need a viable, compelling discount on the company stock. So when you use the term they're price takers, not price makers, you're absolutely right. But I wanted to go further and kind of elaborate on, there's other aspects that I look at when I determine desirability. And once I just determine desirability, then I determine what is going to be the discount that I need to get in order for me to be an investor in that particular stock. Okay. Bushy 1147, good to see you. Thank you so much for joining. Thanks for your support. Let me know, Bushy, if there's a stock you want me to look at, or if there's a topic you want me to take on. I'm glad to do that. All right. So thanks for the question, David, on price taker versus price maker and overall desirability. All right. So we were on the path of Microsoft, and there's one thing that I'll put out there. As you become, let's say you're beginning to invest, and you're like, what kind of company should I be looking for? And I would say that you want to look for companies that have, very desirable companies like Microsoft that have barriers of entry into their markets, very strong moats, competitive advantages. These businesses are so strong, they resemble monopolies, and they can grow their revenue. They're very profitable, and they generate high free cash flow. That's the ultimate. And an example of that is Microsoft. All right, cool. So having said that, one of the lessons that I would encourage everybody to take is study really valuable companies. Understand what is making them so darn valuable. And then go try to find companies that fit that mold, right? So let's study Microsoft, and then maybe study some small caps that might fit that mold. So here's a company, Microsoft, most valuable company on the stock market, $3.42 trillion of value. It's a lot of value. They have $270 million of revenue, which means investors are having to pay about 13 times sales. That's a little expensive, but these guys are growing. They're growing like a 20% top line revenue. Okay, so aside from a PE ratio, a price to sales ratio, it's under 10. It depends on industry profitability and so forth. But a high growth company, it's okay if it's above 10, especially if it's a technology company like Microsoft. But you'll see price to sales on really old businesses that don't make a lot of money. It might be 1-to-1. It might be price to sales of 2, really low. And it's because they're less desirable. BHP, if you recall, this was price to sales of like 2.5. So it's really low. It's less desirable than a Microsoft. Okay. So we're trying to study Microsoft and see what makes Microsoft so darn valuable. So they have a high price to sales. PE ratio is 35. That is high. They better have high growth, revenue growth. Okay, good. So let's look at some other metrics. Year to date, it's doing this. Over the 1 year, it's up 7%. It did have a pretty strong sell-off here in April, along with everybody else. It started kind of a down trend after an earnings announcement where they showed that they were spending a lot of CapEx in the data center. All right, so revenue growth, 14% for a giant company. These guys are $270 billion in annual revenue. To grow at 14% is phenomenal because they're growing. If you do the math, they're growing $40 billion in revenue. That's the size of their growth. That's the size of a big business. That's humongous, right? So it's very impressive. So first point I'll make is you're looking for desirable companies. You got to make sure they grow their revenue and they're consistent growers. If they consistently grow, they're showing me that they are desirable, their product's desirable, the market really likes their products, and they can continue to expand their revenue line. Okay, so that's the first characteristic of a really good business that's going to be priced really well is revenue growth. So that's first item. Second is how much money do they make when they sell product? If you make very little money per order, it's not really valuable. Let's take a look at what Microsoft does. Microsoft is a diversified business, and their gross margins are 69%. If you compare that to like Dell's at like 20%, less desirable. Microsoft has this big gross margin, desirable. Profit, after you're all said and done, profitability of 36%, desirable. Free cash flow margin, 25.6. If you went to the bank and they said, hey, we're going to pay you 25.6% on your deposits, I bet you would put as much money as you could. You'd sell your car, put money in that bank. Hey, I want to earn 25.6%. And that's the high rate of free cash flow yield from this business. Desirable. So what we're seeing is Microsoft's super valuable because they grow their business, they grow their revenue, they have high margins, high net profit margin, they have high rates of free cash flow generation, and they have to have a good balance sheet. What is the score we're looking for a good balance sheet? So the minimum score is they have to be less than 3 times EBITDA. Debt to EBITDA has to be less than 3. These guys are way less than 3, 0.68. And it actually shows that they have a strong balance sheet because they have a lot of cash, 79.6 billion in cash, 105 billion in debt. And oftentimes, these companies like Google, they have more cash than debt. Meta, more cash than debt. Really, really strong balance sheets. So the balance sheet is a qualifier for all these businesses on the top most valuable list, all good balance sheets. You have to have good balance sheets. You don't see a bad balance sheet company up here. It's just an immediate disqualifier. You have a bad balance sheet, you're out. You have more than, debt to EBITDA more than 3, you don't exist in the top 10. So when we look at a small company, we're looking for the same characteristics: revenue growth, profitability, free cash flow, great balance sheet. And that's where we begin the search, right? When we look at these small companies, we want the same mold. We want the next company that's going to be Microsoft or like Microsoft. So an example that I'll put out there would be a small company by the name of ALAB. This one's high risk. So remember, I never make one stock buy recommendation. I just share with you what I'm doing and how I'm operating my portfolio. So let's see if it has all those check marks we need. So it's a small cap, 15 billion in market cap. Okay. Remember, Microsoft had more than a 10 price to sales. These guys have a 30, 30 price to sales. Okay, well, it's not a disqualifier if they're growing. So we'll see if they're growing their revenue. P ratio 361. Whoa, that's really high. Not a disqualifier if they're growing. Growth will cure those two. Well, yeah, they're growing 200%. Whoa, whoa, hey, 200%. That's incredibly high growth. They're at 490 million. So high revenue growth. That's okay, great. That's a very important check mark. That means customers like their product. More customers are coming to this company. They want to buy Astera Labs product. Awesome. Margins, free cash flow. Gross margin 75%. Bingo. Another check mark. Do they generate cash? Yes. Free cash flow margin 22%. Bingo. Balance sheet. Let's take a look at their balance sheet. They have no debt. No debt, all cash, almost $1 billion of cash. They have no debt, all cash. That's an A+ balance sheet. So all the check marks in a small business, small cap. So what we're trying to do is find the characteristics that make these super valuable companies and try to apply them to small companies, small caps. In the case of Astera, just so that Astera is, a riskier stock, more volatility, and it's had a run up recently, right? Like in the last month, it's up 38%, and year to date, it's down 31% because the market sold it off, and then from the low point to where it's at now, it's up 71%. So a lot of volatility there, but you see that Astera Labs has characteristics that are consistent with what Microsoft showed us. That's a high quality company. Nobody's going to argue. Nobody's going to argue it belongs near the top, if not the top stock on the stock market. And what we're trying to do is say, what are the characteristics that Microsoft has? And let me go find some businesses that aren't that valuable yet, based on that aren't priced all that high. And let me buy them when they're little. And then when they get gigantic, I make lots of money. That's what I'm trying to do here with small caps. Okay. I own big caps, but I love buying small caps. Like Robinhood, right? Robinhood is having a terrific year, but Robinhood presented a great proposition to investors. Hey, buy my stock for $18 a share because I am the dominant brokerage for the new generation of investors that want to invest in stocks. These are investors that grew up playing video games on consoles, on PCs, on phones, and they want to gamify the investing journey. Totally get it. That's a skill set. I have two sons, and their skill set on PCs and phones and technology, if I compared myself to where I was at their age, they're light years ahead of me. So Robinhood caters to the new generation of investors. I totally got that. And if you look at the fundamentals of Robinhood, let's remember the fundamentals, right? They have to be growing their revenue. They have to be generating good margins, good cash, and a great balance sheet. So let's see, Robinhood. Show us your fundamentals. So back when they were $18 a share, so the price to sales is expensive. These guys are close to 20, excuse me. Again, not a disqualifier. PE is high, not a disqualifier. Growth, 59%. Bingo. That's the first check mark. Okay, these guys look and smell like a Microsoft. Now let's look at margins. Profit margin, 48%. They're not having gross margins because they're more of a service-based business. Profit margin of 48%, like double Microsoft's rate. Excellent. Free cash flow, 33.5. If the bank offered you, we're going to give you a yield of 33.5, man, I'm emptying all my other bank accounts and putting it in that bank. Just phenomenal net profitability and free cash flow generation. So we have sales growth, profitability, free cash flow, and then balance sheet. Do these guys have a solid balance sheet? Yes. More cash than debt. So Robinhood matched that template of high growth. They had a very good story that I understood, which is, I'm not a Robinhood customer, by the way, but I get that the next generation is different than I am. I'm 56. If you're 26 or 36, you probably view systems differently than I do. You probably appreciate the Robinhood platform, where when I look at it, I'm like, I can't work with that. My brain was built 56 years ago, and I have to look at things differently, and that's okay. You know, we all drive different cars. We all, wear different clothes. It's fine. But what I want is, I want a business that's going to grow and has a very good story, and that's Robinhood. So Robinhood was a stock that matched the criteria that we can see in these big giant companies. These guys are the template of what we're looking for. So we can learn, because the market has clearly told us this is what we're going to buy. We're going to buy Microsoft. And we need to go find the next Microsoft, which in this case of Robinhood, this existed a year, 2 years ago. It's a phenomenal rate of return. A-Lab was another example. And, I can point to other examples, but that's what becomes super fun about investing, is see how we took this concept of, look at the most valuable company. What is it that made them valuable? Let's go find some companies. Put it through fundamental analysis, value the companies, then make some investments. So, all right, Bushy 1147 wants to check out Corsair. Absolutely. Corsair is a gaming company. Corsair does peripherals for gamers. Now, I haven't looked at this stock in a little while. What's been going on? Oof, not a pretty picture. Not a pretty picture, but you know what? I've seen a lot of ugly stocks that made me a lot of money. So sometimes ugly is beautiful. So over the last, geez, man, they really peaked. We were in COVID days, right? Everybody needs some new Corsair equipment. Get me a new gaming keyboard. I need more gaming peripherals because I'm cooped up in the house. So they did great, but the problem was that it's hardware. And we're going to look at their margins in a little bit. Remember that Microsoft example? I'm so glad we went to Microsoft. 80% drawdown. So the market said, Corsair, from your peak, we're taking you down to by 80%. Oof, brutal. Okay. So let's take a look at fundamentals. Price to sales, less than 1. So the market's deeming this to be a less undesirable company. Okay. Forward PE, reasonable, 16. All right, let's take a look at revenue growth. No growth. Okay, quarterly. I like to look at quarterly to see if something new and exciting has come about. And look at that. Some nice growth here comparing the first quarter to the first quarter of the previous year. So that looks good. That looks really good. And I don't know, Bushy, if you follow these guys, but do you happen to know why they grew almost 10%? Is something new and exciting? Like, hey, they came out with this new product. It's great. It's gonna take over this space. Do you happen to know any of those details? I'm gonna look at their investor page to see if they tell us, hey, we came out with this awesome product and it's gonna take over. So here's the investor page. Every company has to have one of these. And so they're going to present at a technology and services conference. Okay. Where's their earnings? So quarterly results. So you see how, like, when we looked at the full year growth, trailing 12 months, right? When you look at an annual rate of, the annual numbers, the full year of 2024 had a negative number, okay? And then the trailing 12 months, negative number. But I like to look at the quarterly because it gives me a little more insight into, well, have they turned things around? Are they beginning to grow? And the answer is yes. They're showing a sign that maybe they turned a corner and they're beginning to grow. Well, if you're in early bird gets the worm. So let's keep investigating, because that 9.63% revenue growth may have been the qualifier we need into this company. They start growing nicely, maybe it's a good investment. So I'm kind of digging a little further because I saw what looked to be a little bit of shimmering gold there. All right, so here is their earnings release. Oh, is this a gaming, like, can you buy this? That's pretty cool. I'm sure it's expensive, but that is pretty cool. It probably also gives you the feel, like you're in the game, you're in the car. Very cool. It's a simulator. Nice. All right, so here's all their products, right? Okay, we know what that's about. Wow, beautiful stuff. Okay. Wow, look at that. Super cool. Well, are they going to give us earnings, or are they just going to wow us with product? Because I'm buying into the product. All right, so their product does look impressive. So here's their gross margins. They're a hardware company, so they're never going to be like a Microsoft or a Robinhood or an A-Lab. They're going to be 40% gross margins. So that's one of the limitations on Corsair, is they're a hardware company. And when you're a hardware company, you have to buy the plastics, the resins, the electric components that go into all this equipment, this tangible product. You have to hire people to assemble the product, to manufacture the product. You physically have to distribute the product. The expenses go up. Where when you have an A-Lab like technology, where it's an intellectual property in the form of a small semiconductor, really is easy to distribute. You're charging a lot of money for a very small product that gets made by a machine. So the margins are very different for hardware businesses. This is peripherals, but if you looked at Dell computer, terrible margins. This is better than Dell, but it's still a hardware company, not as desirable as a software company or an intellectual property company like an A-Lab and Astera Laboratories. All right, so that's the revenue is growing in the first quarter, but it looks like these are increasing target levels. So these are their target levels. Okay, they're increasing their margins, and the latest quarter did grow. So that's good. They're increasing margins. All right. So here's the net growth. Okay. All right. And Q2 is coming. Q2 tends to be a light quarter for them. So Q2, they should grow quite well because the last year's second quarter was terrible. That might be part of the sell-off. Gross margins are getting better. Good. EBITDA looks okay. Cash to debt. So here's their cash, total debt. Very nice, low debt. Very nice job. And you see their EBITDA is, this is for quarters. So you add these last 4 quarters, you're up to 33, 56, 61. So their debt to EBITDA is less than 1. So very good balance sheet. Okay, so it looks like they have an impressive product lineup, and they're growing nicely for the last quarter. This one here, and Bushy, I don't know how close you are to this business. I don't know if you're a gamer. I don't know if you have insight into this business, and you know that, hey, they came out with some products that are just killing it. Everybody wants that product. I don't know that. I'm not a gamer. But if you had that insight, it gives you an edge, right? When we talk about your sphere of competence and your sphere of knowledge, if you really know that about Corsair, that'll help you make a better projection for the future. Are they going to carry that revenue growth further? They're at roughly 10%. Yeah, they're going to sustain that because I know their products just got released and they're killing it. Everybody wants it. The reason they can't sell anymore is because they're out of stock. That's a really good situation. Or you don't know, like me, and I'm like, okay, I'd have to wait for another quarter to see if the revenue is going to stick, the revenue growth, okay? So keep that in mind. So they just ramped a bunch of computer cases at CES, okay? All right, so let's value the company. We're going to do a full valuation on Corsair, and let's get into the finish the fundamentals, and then we're going to do a full valuation, okay? And all right, so we went over their margins. Their margins are not super sexy and exciting. Gross margins are 27%. Operating margins, see how the profitability isn't there. That's why they're not as desirable as Microsoft. Are they investable? I don't know. I don't know just yet. You see how their free cash flow margin is really low. Okay, so this one's going to be a little bit of a tight squeeze. So we have free cash flow in the quarters here. It looks like it's been positive. They had a couple of negatives. Now let's go into the annual. So the annual cash flow is 70 million, excuse me. So 70 million, based on their growth rate, right? If I think they're going to keep growing, I would multiply that number times 15. 15 times 70 is going to get me to roughly $1.05 billion. And I need to either add or deduct net debt or net cash. And when we look at, I think they had a net debt of 50 million, if I remember looking at their financials. So let's take a look at their balance sheet. and we've got net cash of 116, but their actual financials said 50, so I'm going with their financials. Stock analysis aggregates a lot of data, and sometimes they get things a little bit wrong. So I'm going to say that they're worth about $1 billion, and they're priced right around 930 million. So the upside on this stock isn't fantastic. Now, if you think they're going to grow really well, then it would be a good investment. If you think they're going to kind of just exist and kind of just grow a little bit, it's not the right investment for me. It's just not going to be a big valuable company. Maybe it gets acquired by like a Microsoft or a bigger company. But I'd have to see that their revenue continues to grow for one more quarter before I would be able to kind of upgrade the numbers. So that's where I'm at with Corsair. For me, it's a pass. It's not a buy. I would call it a sell if I owned it, because I don't want to tie up my capital. I'd rather go buy something with big margins, something that fits the mold of Microsoft or that fits the mold of Meta. Let me go find one more of those, because if I put my capital to work with 4 small caps that have that mold and 2 of them are freaking home runs, mission accomplished. I'm going to make lots of money. If I spend my capital on Corsair, it just doesn't go anywhere. I'm probably going to end up going, man, I should have known better. Low margins, low cash flow. Man, hardware businesses are tough. They might be good for like a year, but I want something that's good for 5 years. I want it to more than double my money within 5 years. So Corsair is a pass for me. Okay. And those are the reasons for it. I'm glad we went over like the Microsoft example, because then it's kind of like the template, right? Revenue growth, margins, a lot of free cash, great balance sheet. Corsair, historically, last couple of years, they don't have this revenue growth. They don't have the margins. They don't have the cash flow. Their balance sheet's okay. So it's like they don't fit the mold. I got to move on. I'm trying to find home runs. If it's going to be a small cap, I'm going for home runs. I'm not going for, I just made a little bit of money. It's too risky. Small caps are too risky. So thanks for the question on that. It's a good one. Awesome, guys. We've been streaming for a while. I am going to take a little break. So you guys bear with me as I take a 5-minute break here. I'll be back in 5 minutes. All right, I am back. Thanks, everybody. Just needed to take a quick break, and now I'm back into it. Thanks for the good questions. We went over Corsair last. Took a look at the desirability of that business, and thanks, Bushy, for asking about that. Just let me know if you guys want me to go over anything, any questions, any tickers that you'd like me to look at, and we can take a look at those. All right, so moving along, we went over Microsoft. That was the most valuable. The other company that is top ranked, right, is NVIDIA. And the reason for that is NVIDIA's growth, right? Remember how we looked at Microsoft and we established that Microsoft is so darn valued because it's growing its top line revenue. Customers just want more of the Microsoft product. It's really profitable, great, and it generates a lot of free cash. So what is the story behind NVIDIA? Why is it so darn valuable? Let's examine it and see if we could apply it elsewhere. Because what we want is, we don't want to necessarily invest in companies that have very high stock prices that are not going to continue to go up. We want to buy them before they go up, and then we want to participate in the great appreciation. So let's take a look. So first, NVIDIA's stock price is so darn high because of this high growth rate. They were beneficiaries of the big data center build out. The business was doing well during like 2019. I think people were using the GPUs to mine Bitcoin. GPUs, the original workload was gaming. Gamers wanted accelerated graphics, and the NVIDIA chipset enabled you to play on your PC and be able to produce those graphics that you want to have when you're playing video games. And eventually that evolved into mining Bitcoin because GPUs became a better piece of equipment to mine Bitcoin. And that evolved into the data center to build out AI. And it was news in late 2022 that they were going to build out AI with a lot of GPUs, GPU superclusters. And that's where the stock really started to flourish. And you saw the growth in the data center really just explode. And the growth exploded. They went from being a $26 billion company up to now $148 billion. Incredible. So if they can sustain this growth, they're going to continue to sustain the stock price. So revenue growth is there for them, right? Excellent. Now let's take a look at their profitability. They have great margins, 70% margins, really, really good margins. And their overall profitability is excellent. Free cash flow, stupendous. So back to that mold. High growth, revenue growth, high profits, high free cash flow, and the balance sheet, I've already looked at it, is excellent. In their case, I think they have way more cash than debt, and they do. $53 billion of cash and only $10 billion of debt. So talk about being cash rich. That's NVIDIA for you. So NVIDIA has that mold similar to Microsoft, a little different, higher growth, and that's why they're valued so high. So if we could find another business that's going to have high growth like that and be in a high margin business, generate high cash flows, and have a great balance sheet, you can find the next NVIDIA. Tony, good to see you. Happy Saturday. Yeah, the gross margins on NVIDIA did decrease, and the reason for it was they had to write off some inventory. They had made some product that was going to go to China, and then the U.S. government said, nope, you can't do that. So they couldn't sell them to anybody else for some reason, and they ended up scrapping that product. It was like a $5 million write-off. So that really hit the quarter. It was complete kind of like loss with no revenue, and it affected their margins. I think their margins are going to bounce back because that was like an anomaly, a one-time event, and it shouldn't reoccur is my expectation. So that was reported in the quarter. Now, when it comes to NVIDIA, man, talk about where is this stock going to go? And let's have a little fun here. If you guys in the chat, just put it out there. Do you think NVIDIA stock is going to go up or the NVIDIA stock is going to go down? It's a binary decision, either up or down. Please put it in the chat. Love to see what you guys are thinking. Because for the past year, the stock is up 23%. But look at this volatility. Holy smokes. This is a massive cap company. We're not talking about a $3 billion or $300 million small cap. That's what that would look like. For small caps, this is what it looks like. Instead, this is a $3.3 trillion market cap company. When you have a move like this, like an example, from the high to the low here is 36%, okay? That represents roughly $1 trillion of outflows. That's huge. So for a stock to be such a mega cap and have this kind of volatility is, man, it's exciting to watch, to say the least. So we have had a nice run in NVIDIA recently. It's up 39%, but what NVIDIA's been kind of showing is going to be its, I guess its trend is it has these really nice rises that are unsustained. They're kind of like short-term rises followed by short-term massive drops. So are we setting up for another massive drop? Could be. You might see a little bit more of a run and then boom, come down. Because that's what it's been doing for the last year. The last 5 years, it really went up, you know, starting at the end of 2022 is when it started its big run, and it went up 870%. Phenomenal. But then after that, it hasn't been a pretty picture. This past year has been a little rough. And once we get into these compares, we're not too far away. June 18th, they had a high of 135. If you compare June 18th to today's stock price, you're just breaking even. So if you bought on June 18th, you're breaking even. You're like, geez, man, I haven't made any money on NVIDIA. I've seen a thousand stories on it. I've seen the stock go up and down, 100 times, but I've made no money. It's that's got to be frustrating. If anything, scary for an NVIDIA stockholder of being on top of this like rocket ship that may run out of fuel, and then the gravity brings it back down to earth. So this is going to be the stock to watch again this year. I'll be watching it. I'll be creating videos. I'll be covering it because it's going to be exciting to watch. Shadow Guy is in the stream. How are you? I think I missed your hot day here today and humid. Really, in Switzerland, it's hot and humid. Interesting. All right, so yep. Yeah, so I wonder how gamers, I know that, what's interesting is we have a micro center near our home, and it's a pretty impressive store where you can buy, PC stuff. And a lot of the gamers go to micro center in my area in California. And, I'm on their mailing list. So I got an email that, hey, they have NVIDIA GPUs available. And it caught me by surprise because I'm like, man, it's been a long time. Like I'd go to Micro Center and there'd be a line of people, like 50 to 75 people waiting in line, and literally they camp out because they would have a release of NVIDIA GPUs and they wanted to be one of the few that could buy it. And that's not the case anymore. There's plenty of product. And I was like, well, does that mean that the demand is going down? I don't know. It's good for the gamers that want to buy their product because I feel bad that somebody has to like spend the night to buy a product. But we'll see. We'll see. Interesting. So go NVIDIA. So the NVIDIA resale market's pretty good, I imagine. Like if you have somebody that has a functioning GPU that's a year old, you could probably. I imagine you could probably get a pretty good resale price if you own a GPU, it's functioning, it's in good shape, it's a year old, you can probably sell it for a good price. All right, so we went over NVIDIA. That was the second most valuable company. Apple, man, Apple is a little bit of a problem child. It looks like Tony. So the company that had Fry's Electronics was also in the grocery business. Interesting, yeah. I like Fry's. It's just a little too big. It's humongous. It's like the size of a Walmart. Micro Center is a little more tight. Everything's there. It's all PC too. Like Fry's has got appliances. They got everything you can think of that's in a big mega store. All right, so we're heading into Apple. What's going to happen with Apple? This is also, not only is NVIDIA going to be interesting to watch, but Apple's also going to be interesting to watch. And the reason for it is, is this stock going to go down? Over the 1 year, it's a little bit higher, 5.55. But year to date, this one has been the biggest loser of the mega caps. And it's setting up a really negative trend of the stock really underperforming. The stock has a market cap of 3 trillion, revenue is 400 billion. So they're selling for about 7.5 times sales, which is reasonable. PE of 31, a little bit high, because I know that Apple isn't growing. Their biggest problem, remember, Microsoft, NVIDIA, top line growth tells me, are people excited about the product? Are they innovative? Is their product lineup really being accepted by the market? More customers are buying their product. And with case of Apple, they're just a slow grower. They had a negative contracting year in FY23. The full year 24, 2% growth. I mean, that's not keeping up with inflation. So that's the big problem with Apple is what's gonna grow the company? iPhone refresh? Okay, you've been doing that for 10 years. How about something new? How about coming out with something that's new and exciting? The one thing they did try that I'll give them credit for is their whole streaming service. I think they have put a lot of energy into that. I think it's doing okay. So I would give them credit there. But maybe, I mean, I don't know how they can do it, but they got to come out with another product. And they've been late to AI. I think the AI front, they're late on it. Where Meta is taking advantage of it. Google is all over it. Microsoft has been all over it. Apple was kind of flat-footed, and now they're coming out Apple Intelligence, and they're borrowing Gemini from Google and other technologies that they didn't produce. So I think Apple, and part of it, right, is their CEO, Tim Cook, really good professional manager, but he's not a product guy. Like Steve Jobs was in a lot of ways like a crazy genius. He was a genius in kind of trying to understand or imagining products that customers were going to love. Starting with the original Mac, right, personal computer, they nailed it. It was like the best product from a user experience perspective. Nailed it. iPhone, nailed it. iPod, nailed it. That was Steve Jobs. Steve Jobs is gone. Who's going to be the artist behind Apple? It's not going to be Tim Cook. Tim Cook he's like a classical CEO. He's not an innovator. He's not a creator. He's a manager. And if you look at the big businesses, right, like Microsoft was really fortunate to hire their current CEO. I think that guy's really good. I think Google has a decent CEO. That guy is more of a product guy. He really understands technology. NVIDIA is run by their founder. That guy's crushing it. Meta is run by their founder. That guy's crushing it. So Apple, I think, just does not have, in my mind, they just don't have forward momentum. They don't have innovation in their DNA right now. They're pretty much kind of like a Walmart stock. They're just going to try to operate. They're going to try to operate and grow 2 to 5%. Well, geez, man, if you're going to pay $3 trillion for that type of business, good luck. I'd rather go buy a $15 billion market cap company that's growing much faster. And it's going to double my money faster. So we'll see. Shadow Guy. Google founders are still heavily involved. Sergey Brin returned from retirement for AI. Cool. Very good. Yeah, interesting. Okay, so I think Apple, I made a video on them where I'm just seeing the shortcomings. We'll see, what ends up happening. The other thing around Apple, right? Let's see what's investors, big, well-known investors are buying into or selling out of Apple. So we have 17 big investors in Apple. Of course, Warren Buffett being the most famous one and having the biggest part of Apple. Holy smokes. Warren Buffett, $66 billion. That's an investment for you. And then we've got this investor at 7.6 billion, Duan Yongpin. And who else is up here that's really, so Li Lu, not very famous, but he's in it. Okay. Now, we look at who's in it. There's one investor that came into the stock and added Apple to their portfolio, in the quarter, and that was Robert Oldstein. He added what looks like, is that $5 million of Apple into that portfolio. David Rolfe added. He has a small, well, big for me, but small position compared to Warren Buffett. But the others reduced. You got this guy, he reduced his position. He's looks to be the second biggest investor into Apple. He reduced his position by 16%. Jensen Investment reduced. David Cass reduced. Torrey Funds reduced. Poland Capital reduced a big portion of the shares. Li Lu reduced 65% of their shares. And then Francois Rochon reduced 44.8. So there's a big reduction. So the sell-off in Apple is real. Let's take a look and see if anybody sold their Apple stake outright. Let's take a look here. No, nobody sold outright, just reduced share counts. And the quarter before, of course, when did Warren Buffett sold 25% of the Apple stake in Q3 of 2024. And boy, that guy's smart. He sold at the right time because Apple's been really struggling this year. So that is interesting to see that Apple has a lot of people selling off their stock. Interesting. Now that I visited Corsair's website, I'm getting all this advertising on Corsair. Isn't that interesting? I'm being tracked by some type of tracking software on their website. All right, so, wrong list. Give me a second here. Close that guy, close that guy. So we went into Apple. Amazon is, I think Amazon's fine. They've got really good strategy. I think the stock is a little expensive because Amazon's been spending so much darn capital on their business. Now, the good news is they're investing it in the business. The bad news for investors that focus on cash flow is just makes the valuation look a little expensive. Now, they had sold off for a while, but now they're recapturing some of their market cap. And the same thing goes with Google. I think Google has a better valuation than Amazon, but they also were spending a lot of capital in their business, which made them less desirable. The one that is really set to perform is Meta. I've been buying Meta stock because I think it's discounted. They have momentum. They're doing well year to date. They got the Meta AI business. They claim that they have over 1 billion users of Meta AI now. Oh, man. Talk about going from zero to a lot of users fast. Meta is getting it done. All right. So, Tony, you like Apple at $2 trillion, which would be a 33% decrement to their stock price. Yeah, maybe. All right. David Knight, good to see you. Yeah, that's the paradox of Apple is what are you? You're not a growth stock. You're not a dividend stock because their dividend's small. You're kind of in no man's land. Who would want to invest in Apple? And all those super investors that were selling their positions, I have to imagine the selling is going to get even more intense this quarter as you see the stock really selling off. That's my projection on it. All right, so we looked at Meta. Broadcom is one of those stocks that is Broadcom in the top 10 now. I guess they are. This is a semiconductor company. I think their price a little too high. It's actually one of the stocks that I think is priced way too high because I think they rode the coattails of Nvidia, and that stock I could see it coming down in 2025. All right, Tesla. Let's get into Tesla for a little bit. Let me do this before I get myself confused again. So Tesla's supposed to announce or roll out. Is anybody on the stream located in Austin, Texas? If anybody's located in Austin, Texas, please comment in the chat. I'd like to stay in touch with you because it's supposed to roll out on June 12th. And I don't know if you guys could hear that. Oh, okay, so you guys can't hear the video. Sorry. Um, so basically, Tesla's supposed to roll out their robo-taxi service. They're going to do it on the Model Y. And, I'll be really impressed if they pull this off. It's just, man, for to think about everything Waymo's had to go through, and if Tesla's able to kind of shortcut it without major incidents, I'll be really impressed. But I'm also thinking, what if it doesn't? I mean, Tesla's really going to tank the stock. Um, so uh, that'll be really interesting to watch. They're saying they're already testing, I guess, the Model Ys and the uh, Cyber Cab on the streets of Austin. Is anybody aware of that? Maybe I can go to Reddit and we can see, or actually, let's see, Tesla. So here's they've been testing its robo-taxi service, Cybercab in Austin. Okay, it looks like it's happening out there. So, man, that's going to be a big event. I think that's going to be like equivalent to like a massive earnings announcement. Um, Okay, cool, Tony. We'll take a look at Reddit and UNH. I did want to look at both of those, by the way. Thanks for reminding me. So, United Healthcare. Let me finish my thoughts on Tesla. So I think, yeah, as we prepare for June 12th, I think it's going to be like an earnings announcement level of attention. If they pull it off, I mean, it's going to be a huge rally for the stock, huge. And if they don't, it's going to tank the stock, I imagine. But I hate kind of predicting stuff on Tesla because Tesla stock is like, it's totally like a celebrity stock where it seems like a lot of the setbacks are kind of let go, or they give the company a pass, and all their future kind of aspirations are taking at full credit. Like, oh yeah, they're going to do all these things, and it's like, wait, it's going to be really hard to do all those things. Are you sure they can pull them off? Sure, it's Tesla, but their track record is like their product launches have always been late. So that's interesting to watch. And then Dwayne, any insight for Futu? Absolutely. There's a video on my channel. Take a look. Take a look on my channel. If you search Futu on my channel, you'll find the video. I created it within the last week. All right, so let's take a look at Reddit. I'd love to talk about Reddit. So remember how we were going into Microsoft and we said, okay, revenue growth, profitability, free cash flow, great balance sheet. Okay, that's what makes Microsoft so darn valuable. All right, Reddit, show us your fundamentals. So market cap 20 billion, revenue is 1.5 billion. So you're getting the stock for about 14 times, maybe 15 times revenue. Okay. Yeah, about 14 times revenue. It's a little expensive, but I know that they're growing, so I think it's okay. PE is high, they're growing. Okay, let's get to the growth. So this is what excites me about Reddit is 64% growth. They're already a $1.45 billion revenue company, okay? And knowing what I know about Reddit, right, is this is a different experience than Facebook or Instagram or TikTok or Snapchat. I happen to believe those apps are interesting. Like I'm on Facebook regularly, especially because my family, they're Facebook users, and I have to go on there to see pictures of these little, the youngest generation of my family, because I have two nieces that have little kids and they're super cute. I have a nephew that he and his wife have little kids and they're super cute. So I want to see them. So I go on Facebook and Instagram. But Reddit's a different animal. Reddit's where you go deep. You go into a topic and you really dig in deep. And I don't think there's a competitor in that type of experience. I know Discord is different. Discord is more like a collaboration site, where Reddit, you have these communities where they've gone deep in a topic for like years, and you can really get deep into a topic. So I think that experience and that use case is going to be their differentiator, and they're going to dominate that space. I don't think Reddit's ever going to get the size of Facebook or any big mega cap or mega social app kind of status. But I think within their piece, they're going to dominate. So can they go to like $10 billion in revenue? Absolutely. Totally doable. Because our friends at Meta, they're gigantic. Meta's like, from a revenue standpoint, Meta's at 170 billion. Oh man. So Reddit can grow to 10 billion and make us a lot of money from a stock appreciation and still not be like any threat to Meta. Meta's like I don't care if you're taking on like college professors and people that are really diving into a topic head first and, talking about a related topic, from 500 different perspectives with 1,000 people commenting. That's the Reddit experience. Having said that, so the growth can persist. They can go from 1.4 billion to 10 billion undisturbed. I think there's very little competition for them to do that. In doing so, they have the revenue growth percentage, gross margins of 90%. Woo, that is a beautiful number. Free cash flow margins are 21%. That is a nice number. So they have revenue growth, margins, cash flow. Let's look at the balance sheet. So balance sheet is 2 billion of cash and 26 million of debt. So pretty much all cash. So these guys hit all super boxes. These guys are an exciting business. And that's what excites me is if they can continue to dominate the spot in social apps that they dominate and grow internationally, these guys are going to kill it. And I think advertisers would want to advertise on Reddit because as people get into a community, I think advertisers want to advertise in the communities that they're talking about. Let's say they're talking about a particular car brand like Porsche. Porsche would love to advertise in that community within Reddit. So those things really line up well for Reddit. When I value the stock, let's take a look at the valuation of Reddit. And I'll make this a little bigger. I think I have to. All right, that's a little better. So I think the stock is fairly priced, and I continue to add shares because I'm getting a higher rate of return. They're smaller, so I went with a 9% discount rate. I'd like to own a good position because I think Reddit is going to be worth a lot more in the future because of the things I just noted. I think they're going to continue to expand their profitability as they get larger. They're going to get far more profitable because of their scale. So Reddit is a really nice stock. I know the stock sold off recently, and then it came back this past week. So let's take a look. And when it was selling up hard, I was just buying shares. I was like buying shares as fast as I could, just buying. And then the stock decided, well, I think we're going to go in a little bit of a rally. Okay, great. I haven't been able to buy shares in a little while. That's my number one complaint about Reddit is why did it have to rally so quickly? I wish it would have gone down another 20% so I could have bought more shares. But now I've got to kind of like wait for another dip and then buy some more shares. So Reddit is working. We are cooking with gas on Reddit. I don't think I'm curious to see if any super investors are buying into Reddit just yet. I mean, one super investor, Chase Coleman, and he owns $340 million of Reddit. What other holdings does Chase Coleman have? He owns Meta, Microsoft, Google. So this guy's into tech. He owns Take-Two Interactive, C, which is, I think they do crypto NFT marketplaces. Those I think are on C Limited. NVIDIA, Eli Lilly. This guy's got some quality stuff, man. Okay. He owns a lot of stocks. Pony AI. So this guy's, I wonder how his performance has been. I don't track this guy, but maybe I should. Might look at his portfolio. So Chase Coleman. He bought Reddit. Cool. Go Chase Coleman. I've never heard of Chase Coleman. Tiger Global Management. Cool name. Anything with a tiger looks cool. So Reddit is, my only complaint is the stock has rallied too much recently. It really provided a nice little opportunity. And we'll see when it has another dip so I can buy more shares. The other one was United Healthcare, and United Healthcare has had a rough year, right? Down 39%. But this is United Healthcare, terrific business. And more recently, from May 14th, stocks up 10%. So investors are paying attention to the fact that, hey, this is United Healthcare. We'll look at their fundamentals in a little bit. But let me show you what super investors own, which super investors own United Healthcare. And there's a number of them. 17 super investors own United Healthcare. So this is a blue chip quality business that has had a lot of bad luck. CEO got assassinated. CEO resigned. Okay, that's real, but it didn't affect the core business. Insurance companies tend to get a lot of flack around their practices because usually it's a very sensitive topic, right? People are sick, they want to go to the hospital and get things covered, and hospital visits are expensive, so they can't say yes, to everything, or they go broke. And when they say no, people get really upset. And in some cases, maybe they were wrong to deny certain treatments and stuff, but it's been the insurance practice for many, many years and decades. It's not like they started to do that and they were the innovators of it. So that's kind of like the bad news, but let's kind of look at the facts. All these super investors are invested. David Tepper, this guy is number 2 right now on my list. Chase Coleman, he owns Reddit. He owns $229.8 million of United Healthcare. There's a lot of investors on this list. And let's look at the activity we've seen in the last quarter. So we've had some reductions. Looks like some people are buying into that negative news, and some people are buying into that, leaning into it. David Tepper, he's leaning into it. Lee Ansley bought into United for the first time. And I bought into United in this quarter, United Healthcare. It's a great business. I owned United for years and sold at a nice gain because the stock price has gotten so high. Now that the stock price has come down so much, I'm glad to buy on all this negative news. You have a lot of negative press, but let's look at the fundamentals. The fundamentals tell us a whole different story. Market cap to revenue, you're paying 0.5 price to sales. That is a screaming discount on a company. PE ratio 12.6, dividend 2.8. Okay, discounted by 53% according to analysts. This has been a growth company. Year after year, growing top line revenue. You grow year after year when you're operating in a way where your customer wants to renew, continue to do business with you. More customers want to get your insurance. That's a strength that they have, is consistent growth. This is like Visa, just consistent growth. Not only that, so back to the template. We got to have revenue growth, great. Let's look at margins and cash flow. So cash flow has been phenomenal. Look at this. They went from 13.6 up to $24.8 billion. $24.8 billion of free cash flow. Let's look at the chart. Nice, beautiful upward slope. All right, so profit growth. Now this is a gigantic company, 400 billion. So their margins aren't going to be overly impressive like a technology company because they are also they are regulated and they can't make like gigantic margins. So they make small margins and good cash flow on a giant number. So when we look at cash flow, $24.8 billion of free cash, it really creates a high level of value for this company. Now let's check the balance sheet, make sure these guys have a solid balance sheet. When we look at the balance sheet, they're going to have $34 billion of cash, $81 billion of debt. Debt to EBITDA is 2.16, below that 3 that we need it to be under. Now, when we look at the United Healthcare valuation, 51% discount. Why is that? Because the cash they produce is so valuable. Okay. And when you project that out, they're just a consistent grower. Growing the cash at 5%, which is conservative, they are going to grow the cash, and the cash alone, if you go net present value by 8%, $627 billion of cash value today, net present value. Add cash, take away debt, we get to an equity value of $580 billion. So you have a 53% discount if you compare the intrinsic value based on cash flows of United Healthcare to its current stock price. That's an opportunity. It's knocking. It's knocking on my door, and I'm answering. I'm buying shares of United Healthcare. Now, I would be surprised if this stock is trading under $600 2 years from now. This thing's going to double. This thing is a great stock. Look at this stock. It was doing its thing, and then it's had all this bad news. But the core business hasn't changed. They're the premium insurance company in the United States. This past year has been horrible. Really, really down year. Over the last 2 months, it's down 50%. It's an opportunity. It's an opportunity for me. So I'm taking it. United Healthcare, rock and roll. All right, so I think we got a good number of comments coming in. Shadow Guy, you're going to check with your friend in Texas. Awesome. Yeah, United Healthcare is, and it's too big to fail. And it's because who is the United Healthcare customer? Predominantly big corporations that have like 50,000 employees, 100,000 employees. They can't move health plans just, on the, flip of a hat. It's something that their employees like having. They have their doctors. It's just a very difficult thing to change. And I don't think there's dissatisfaction at the customer level in general. I think that they do a really nice job. I've been a customer of United Healthcare for 20 plus years. And I'm speaking from my experience as a customer, paying for their insurance and receiving the healthcare benefits, raising 2 kids with my wife. And my wife loves United Healthcare. She would not, she doesn't want any insurance company other than, she wants United Healthcare. She doesn't want to entertain anything else. And that's the kind of loyalty that I think a lot of people have towards United Healthcare at the customer level. Other levels, they're kind of a lightning rod to criticism and bad press. I get that. Insurance companies tend to get that. And it'll be that way in the future. But I separate, kind of sensational kind of press, separated from fundamentals. And I'm an investor. So United Healthcare, Canada EVs, you bought some as well. Yeah, the new CEO came in and he bought like $25 million of shares. Boom. That's a confidence builder right there. Speaking of which, who is this new CEO? The new CEO is the old CEO. Wasn't there a song that had kind of lyrics of that type? It was something like, Meet your new boss, same as the old boss. All right. So I think this is where the transition of leadership. May 13th. My opinion matters with United Healthcare. So Stephen Hemsley named CEO. And I'm reading, guys, here. Just bear with me. So the new CEO was the CEO from 2006 through 2017. He was serving. Okay. And the outgoing CEO is going to serve. See here. So the outgoing CEO is going to serve as a advisor, and it looks like the CEO that resigned did it for personal reasons. So the CEO coming back, he knows what he's doing. He ran the company. He ran the company during a time when they just were just crushing it. They did really well. The stock flourished. United Healthcare stock did great for me. So I'm coming back for more. Love to see the stock triple in value as fact. And I think it can do that over the next 5 years. So that is United Healthcare. At any time, every year, I think early in the stream, somebody asked, is it a good time to invest? It always is. You just have to find the stocks that are good investments. Not every stock's a good investment. You can't, like, if you invest in the S&P, you're playing the field, right? So that's a different investment decision. But if you look at discounted stocks, you could do your homework and find those discounted stocks. I've done my homework and I rank stocks based on the amount of discount that they have. Then I have a watch list and I have stocks that I'm buying. I share that information with the members of the community. If you want to know about that, become a member. I publish out what I'm buying each week in a video. I released it, I think, last night and went out to the community so they know what I'm buying and the reasons why I'm buying it. So I do a lot of homework on my stocks and I'm ready. I'm ready. If the market takes a stock down that I believe in, like a Reddit, boom, I'm buying. United Healthcare, boom, I'm buying. The prepared investor will do well in all markets. Sometimes markets are expensive, so I slow my roll and I'm not buying a whole lot. And when you see situations like the one we saw earlier this year where you had the market just really sell off, I was ready with my capital. Let's buy, and buy. And I'm really glad because the market really rebounded and I'm doing really well this year. So that's the prepared investor. It's always a good year to invest in the right companies. Okay. All right. Oh, here we go. We won't get fooled again by the Who. All right. Thank you. Tony, man, how do you know about the Who? I think the Who wrote that song, I think, before you were born. But very good job. Music trivia by Tony. All right, guys, I'm going to go ahead and land the plane. It was a really cool stream today. Went for a little over 2 hours. Really nice to spend Saturday morning with you guys. I appreciate it. You guys enjoy your weekend. Hopefully you made good money in May because it was a positive month. And we're heading into June. What's June got in store for us? Well, we got the Tesla Robotaxi launch. We'll see how big or small that is. And it's a little bit of kind of like the quiet period. We're not going to see earnings announcements, the big giant ones, for a while. We have to wait about a month and a half for that. And then we'll be back into earnings announcements. And between now and then, I think the tariffs are probably going to affect stocks. So hopefully tariffs get resolved. The whole inflation watch will affect stocks. And individual news, right? Individual news stories will affect stocks. So we'll see. It might be a little bit of a sleepy kind of period of the stock market for the next month and a half until we start rolling again with earnings announcements that come in fast and furious. So I'll continue to stream as often as I can, and I appreciate you guys attending. Please consider becoming a member and becoming a greater participant within the community. I appreciate everybody who's already a member, and I appreciate you guys attending this stream. It was really cool to see you guys. I wish you a great weekend, and thanks again for tuning in.